Viewers, it's a day that came out of nowhere, bearing unexpected but pleasant tidings. The kind of news that infuses Indians with a sense of pride, makes us all collectively walk that little bit taller. What am I talking about, viewers? Well, I'm talking about a strategic endorsement by the chief of the European Union. Ursula von der Leyen is expected to travel to India in a few days. She's going to be invited for the Republic Day and is going to be with Prime Minister Modi overseeing the great event. And she's announced before arrival that when she lands, India and the EU under her will sign the mother, not my words, her words, mother of all trade deals. The moment it is inked, it will signal that the world's most sophisticated trading bloc sees India not as a risk, but as a sheath anchor. And the best part is that Europe is willing to put their money where its mouth is. The deal will bring together a market of 2 billion people, nearly a quarter of global GDP. This is what Ursula von der Leyen said. We are on the cusp of a historic trade agreement. Some call it the mother of all deals. One that would create a market of 2 billion people, accounting for almost a quarter of global GDP. Listen to our viewers.
And right after Davos, the next weekend, I will travel to India. There's still work to do, but we are on the cusp of a historic trade agreement. Indeed, some call it the mother of all deals. One that would create a market of 2 billion people, accounting for almost a quarter of global GDP. And crucially, that would provide a first-mover advantage for Europe with one of the world's fastest growing and most dynamic continents. Europe will always choose the world, and the world is ready to choose Europe.
Well, the EU chief, just like other global powers and the European Union, are being attracted not just by the size of the market, but India's dynamism. And the numbers are here to back their assessment. Look at the numbers, viewers. Look at our GDP growth ever since the pandemic. Look at the numbers. These are the first revised estimates that were put out in 2023-24. 9.2%, 24-25, provisional estimates 6.5%, 25-26, first advance estimates 7.4%. The IMF has also bumped us up. But India is not just a factory producing product, it's much more. And the likes of Ursula von der Leyen knows this. As the global economy fractures because supply chains are weaponized, trade turns into truculence, alliances are tested, capital is searching for certainty, for resilience, for growth that is here to stay. Increasingly, that search leads viewers to India. Why? Because India is the only viable alternative with scale. These are the hard facts tonight, viewers, on this show. I always bring you the hard facts so you can cut through the chaff, cut through the rhetoric, the negativism, and get straight to the points that matter. Viewers, India isn't just a factory, it is also a market with the world's largest population and fastest growing consumer demand. So people are attracted to it. India offers a rare mix, manufacturing at scale, plus high-value services from electronics to digital infra. So viewers, people can come and make in India. In a fractured world, investors value predictability. India offers policy continuity to build with India, to integrate supply chains, diversify risk, and viewers, quite frankly, tap a market that is still expanding while others are stagnating. This is India's Viksit vindication, as I call it. Those who dismissed India's growth story haven't seen this coming because their jaundiced vision didn't allow it. And there are many examples, and I'm going to put them on your screens, viewers. Today, someone like Donald Trump has realized that his tariffs may have won him a few dimes, but he's also realized that these tariffs have damned his country in Indian eyes. which is why he's now in a bit of a charm offensive, sending his envoy, inviting India and making the right noises, even meeting Indian business magnates despite branding India a dead economy. Viewers, there are others. Rahul Gandhi, who echoed Donald Trump, used the same words. India is a dead economy. P. Chidambaram, ex-finance minister. It's a slowing economy. Inflation is raging. Food, education, healthcare, everything is in double digits. Abhishek Banerjee, another doomsayer. And then, of course, viewers of the Aam Aadmi Party, the economic situation, says Sanjay Singh of the country, is extremely alarming. India's economy is currently in the ICU. The trade deal, viewers, this trade deal, the mother of all trade deals, will catch the world's attention, but it will also help India diversify and reduce dependencies. As the world's endorsement becomes unmistakable, the question is no longer whether India is rising, but whether its critics saw it coming at all. And we are going to open this up. But before this, let me go straight across to Davos, viewers, where this statement was made. And I'm joined by Chandra Srikanth, executive editor of Money Control, reporting for us, reporting for a sister brand. Chandra, thank you very much. What are the larger implications of an impending mother of all trade deal for India's growth as NDA tries to diversify trade?
That's a strong message coming in from Ursula von der Leyen just a day ahead of President Trump's Davos visit. Now, what does this mean for India, which is already trying to diversify trade? It opens up a huge market. So if you look at the Indo-EU free trade agreement, it's been in works for a long time, for over a decade. But the pace was hastened in the last year when it started facing pressure of tariffs from the US. So if this concludes successfully, if they are able to hash out terms of the agreement, this could potentially open up a market with a size of 2 billion people and will account for a quarter of the world's GDP. Now, as part of the FTA, what's been negotiated so far, some of India's labor-intensive sectors, be it engineering goods, gems and jewelry and textiles, which were hit hard by peak tariffs from the US, could benefit because there is a similar profile of exports that happens to the EU. So if the EU relaxes barriers on that, that could be beneficial for some of India's labor-intensive sectors. In turn, India will reduce the cost of importing some of EU's key exports, which includes wines and cars. So these were some of the terms that were being discussed between the two parties.
So let me ask you, Chandra, can this be seen as a major vindication for India's growth story, this EU deciding to bet big on India?
This is certainly a shot in the arm for India. In fact, literally every global CEO, India CEO we've been speaking to here are describing India as a beacon of growth, a pocket of growth. In fact, the IMF yesterday raised growth projections for India by 0.7 percentage points to 7.3, 7.4%. So certainly India is looking like this ocean of stability in an increasingly fragmented world. In fact, that's also India's key pitch at Davos this year, led by a delegation led by Union Minister Ashwini Vaishnav, as well as 10 states. And India's also executed reforms like the Labour Code, which was a big ask from the industry in 2025. So for now, at least, things are looking up for India.
Well, thanks indeed, Chandra, for giving that perspective to us. Thank you very much, Chandra, reporting there from Davos. She's been covering this particular event for CNN News 18. We'll be checking back with her. And don't forget, viewers, at the end of the show, we're going to be checking in with Richard Quest, who's going to give us a ground view of how India and its story is being received. So that is a conversation that you must stay tuned for. I want to go straight across and open this up. Santosh Mehrotra joins this panel. Mr. Mehrotra, thank you very much. Nice to see you. Chandra there is saying that India is being seen as this ocean of stability in a fragmented world, a winning bet, really. Would you agree? Would you concur? There are many people who've been saying that, oh, investment's slow to come in because the India story is not credible. Told through the numbers, it's not credible. The numbers themselves are sort of, I don't know, some people say not quite accurate. And you've probably read that article in the FT and so forth. I wouldn't like to name the economist here, but I think we all know who we are talking about. Mr. Mehrotra, your comments, if you can hear me.
Yeah, I can hear you loud and clear. I wasn't sure whether you were putting the question to me. So, can we first look at it from the EU point of view? Let's just remember that this is needed by the EU significantly. And of course, India needs it as well because India's exports to the United States have been impacted. But please understand the conditions under which the EU has been negotiating. For the last 4 years or so, the 27 EU countries' growth has been somewhere between 0% and 1%. So this is not a very dynamic region any longer. Second thing that has happened in the EU is that energy costs have shot up dramatically, so their manufacturers, the cost of their manufacturers has risen so that their exports have been on the decline. Their energy costs have shot up ever since the Ukraine war began because the Nord Stream was blown up by the United States. So all the cheap oil and gas that was coming in from Russia, that's not available any longer. So the result of this phenomenon has been that industry has actually been leaving the big manufacturing powerhouse of Europe, which is Germany, on a massive scale. Now, these are the broad conditions under which the EU has been looking for, clearly markets where it can expand in. And of course, India is a big market. There's just no question about it. And it's a good thing that this FTA has come, particularly at this juncture for us, because obviously our exports have been impacted because of the Trump tariffs. And it's likely that we should be able to divert, as I think your reporter said, some of our labor-intensive exports to them. However, we do need to worry about we meaning some industries will need to worry about how this is going to pan out for India. Now, if wine exports are going to come in duty-free, it may reduce the price of imported wines from all over Europe. How is this going to be impacting the Maharashtra and the Goa wine industry? That's something that will need to be taken into account. The cheese growing industry has been growing in our country, and certainly the cheese, and there is now a diversification of cheese being manufactured in India. After all, India is the largest producer of milk in the world. So we've got to think about that. I don't know what is the nature of the deal that is being struck. We have no details about that.
No, I think, neither do we. And to be honest, we'll have to go into the fine print, no doubt. But the point is, viewers, I'm getting a sense from the economist here that, that because it's not a dynamic region, let's not crow about it too much. We do forget, viewers, that it can buy Russian oil, it can buy energy, it can buy lots of things, because this is one of those regions, and let me get the BJP Sanju Verma in. She's an economist really by training. This is an area where the GDP per capita as a bloc is pretty much the highest in the world. And it's also a space where high tech has taken root. They do still manufacture a lot of things that we import, especially high-tech equipment, military equipment, and so on and so forth. So it's not some dead zone. It's not another dead economy block, because that's what many people are going to try and suggest it is. So, big deal. Yeah, I mean, it's okay. We need it. Should diversify, of course. But let's not crow about it. The fact is not that, viewers. The fact is that these people think that we are worth it, that they're going to gain, specifically if a region is not doing so well. They believe that India will give it something. That's why they're coming here, and that is what goes completely against the narrative that we constantly hear. Nonetheless, Sanju Verma, how would you respond to Mr. Mehrotra?
Okay. Rahul, I've studied economics also, not just by training. I've done my public policy economics from the University of Oxford, if that matters. But this is not about academic credentials. I'll just say this, to add to what Mr. Mehrotra said. You know, I've done some detailing because on your show, the hard facts are what your audience appreciates. In terms of trade, India accounts for just 3 to 4% of global trade. The European Union accounts for 14 to 16%. In terms of GDP, in PPP terms, we account for 8 to 9.5% of the world's GDP. The EU accounts for about 15 to 17% of the global GDP. In terms of population, EU accounts for about 5.5 to 6% of global population. We account for about 17 to 18% of global population. So is this coming together by way of an FTA, a marriage of equals, or is it that we are trying to attract somebody or a region where the average GDP growth has been barely 1%? And don't you forget, we are growing at 8.08%. That was our average GDP growth in the last 5 financial years. And we have a retail inflation of 1.3%. The EU is growing at 1% and has a retail inflation of 1.9%, which means basically adjusted for inflation, it is degrowing. But that's not the point. I want to very quickly focus on just 2 areas, barring, what has been said about, besides what has been said about wine, cheese, imported cars, gems, jewelry, engineering, so on and so forth. The 2 big areas where India and EU coming together will mean a lot in terms of substantive benefit for both economies. A is our IT services. We account today for 55% of the global outsourced IT services market. The European Union accounts for about 23% of that. And India accounts for 8% of the global IT tech force. So there is a huge opportunity there. And more importantly, people forget that today India is the world's 3rd largest pharmaceuticals market in terms of volume, accounting for 20% of the global generics pharma market and accounting for 60% of the global vaccines market. I think here there can be a great collaboration because don't forget, despite the EU being in doldrums in terms of GDP, do you know something, Rahul? EU last year spent 55 billion euros just on research and development expenditure on its pharma industry. And don't forget that while we are the 3rd largest pharma market in terms of volume, the EU is the 2nd largest pharma market globally in terms of market share, and the annual trade surplus generated by the European Union within the pharma sector alone is 195 billion euros. So the limited point is within pharma, within IT, it is going to be a force multiplier when these 2 giants come together.
It's about perceptions at the end of the day, viewers. Sentiment. Money follows sentiment, Dr. Raman. That's a established principle. And when people put their money where their mouth is and they bet on India, it means that they believe that the story that some people are trying to obfuscate and muddy by suggesting that numbers have been tweaked and this, that, the other, that story takes a major hit, isn't it?
Rahul, I think I would look at this slightly differently. While it is most welcome that any kind of trade deal with the EU is signed, the bottom line is that these are situations which are extraordinary around the world because the EU now finds itself under pressure with the United States. 10% tariffs already there. Now another 10% is coming up from February 1st. So there's going to be a 20% tariff. India already faces a 50% tariff with we don't know when that will go. So I think that, there is a need for both sides. I mean, we're seeing it all over. Canada is now saying we're going to import 50,000 car EVs from China. And the UK today has now given permission for a massive Chinese embassy to be built in the heart of London, which they had refused on security grounds. So we are in a dynamic world. We are changing. and things are moving very, very fast thanks to Mr. Trump. And I think that if India is able to benefit from this, look, the point that Mr. Malhotra made is that the EU is currently not the hottest economic region in the world. I mean, they are largely stagnant economies, and the future in the immediate future for them is not bright. Having said that, any trade deal with the EU is going to be beneficial for us if the terms are okay. And I think that one would hope that something positive comes out of this.
So
but
can I ask?
I just want one sentence, Rahul.
Yeah, please.
To sort of talk about it like it's a transformational deal. After saying, look, we don't know what's in the deal. We don't know what the deal is. We hope that it would be a good deal.
Okay.
And we expect it to be a good deal. But I think we should hold off on the champagne for the moment until we know what is in the deal.
Okay. Well, viewers, we're not popping any champagne. We're only saying that obviously the Indian government is going to negotiate something that will also benefit us. Otherwise, they'll be shredded to bits in our very vibrant democracy. It's a known fact, viewers. If we wanted to really roll over, we would have done so. Trump would have been made happy. He likes to be made happy. As you know, viewers, we would have been like another Shehbaz Sharif offering him shabashes, saying, we want you to get a Trump, we want you to get this great Nobel Prize and you're the greatest and so forth. But we haven't, viewers. We've stuck to our guns, isn't it, Mr. Gupta? Clearly, this deal, mother of all deal, which is being advertised, wouldn't be a one-sided deal, because if that were the case, it would get very easily exposed and Ursula von der Leyen would have nothing to crow about. She's not going to play with her own, first of all, credibility, is she, on a global stage?
It's a very chaotic world right now, Rahul. For the first time, I think in 5 decades, 6 decades, you're looking at the Europeans standing up to the hegemony of the Americans, especially on the Greenland issue. Now, for the Indian business community, for the Indian government, it's very, very important to start looking away from the US, because White House is being volatile right now. And for the next 3 years, we have to assume there's going to be a certain degree of volatility in the White House. The tariffs will kick in, the exports will be hit, and therefore the European Union opens up a new market. Their growth rate, their stagnation, all of it is a different point. But at the end, we have to understand it's a market of 500 million people. And that is where our textile exports, our leather exports, our car components, if we can open up a new market for them, that will be really helpful. Now, Mr. Mehrotra made a very interesting point, and I sort of want to build on that. He said we also have to look at the local industries. For instance, wines, for instance, whatever Maharashtra and Goa wine industry might have to sort of now compete with. Look, Rahul, I think it's also a time when we start looking at our FTAs, we also have to realize that we cannot protect our industries forever.
Yes.
Our industries, our local industries will also have to evolve. They have to start getting competitive. Now, I do not mean this for agriculture. I'm pretty sure the agriculture will be off the table, because that is where the US-India FTA is also stuck. But say the auto industry, our industry has to start being competitive, at least if not equal the Germans or the Europeans. You have to be in a competitive position, because that is also about consumer interest. We cannot forever have a 100% tariff or a 100% tax on car imports, just to give you one example. But again, we'll have to look at the deal at the finer print to really conclude what the deal is about. But the budget is coming up, and all this chatter around FTAs, we are looking at the declining employment prospects in the services industry, especially in the IT sector, with the whole artificial intelligence revolution. This budget needs to be obsessed with MSMEs, Rahul. A lot has been done on the labor reforms and the GST reforms, but now it's time the government takes out the law bureaucracy from the equation when it comes to MSMEs. Absolutely. That is what the budget needs to be about.
And all these deals with especially markets that have the ability to purchase things like leather goods, shoes, jewelry, gems, etc., because they benefit this MSME sector, which got hit, and undoubtedly so, by the US sanctions. So this is creating redundancy. It is also helping us diversify. Mr. Akhil Swami, the question that I'm still getting at, and I'm going to continue to ask, is whether critics saw this coming at all. What critics have been saying is that India is a dead economy. Now, does capital chase stability, or does it chase instability? Does capital chase, sir, dead economy or vibrant economies that can produce return on investment at scale? Tell me, sir.
See, I do not understand as to what is the stand of the mainstream media. One, you are happy when you make Donald Trump as the president and yagyas and havans are done for him. And you say that America and Donald is our best friend. Then he ditches us. We go to BRIC countries. Then we get some scolding from the BRIC countries. We go to Europe. We ditch Russia. We stop buying oil from Russia and Iran just because Trump says that we don't have to buy from that. So I do not know as to today you are happy with Europe. Now, second thing you have to understand when you are talking of the trade deal. See, the population of Europe is going down. Our population is going up. And you yourself in the introduction said that we are a consumption economy. And they want a consumption economy to put their products in our country. For last 7 days, the share market is down, going down every day because now we are feeling the heat. What the American economy and the tariff on us has done to us.
Okay.
Today, we have completely separated from Russia, which is our oldest friend. And Europe will take advantage from you from trade deal because
one second, Mr.
their
Swami.
population is less and their production
One
is
second,
higher.
one second. Let me just come in here. Okay, so
Our manufacturing contribution has gone down in the last 10 years.
Okay, so one second. So has China's population.
become a trading
1 minute. So has China's population, and Japan is dwindling, sir. It's shrinking.
Can I?
Almost on the verge of a crisis.
1 point, Rahul. 1 point.
India is shrinking.
Yes, Mr. Gupta, very quickly, I need to move on.
Rahul?
Yeah.
No,
one
that's
second.
an
One
incorrect
second,
assessment on
one
the part
second.
of Professor
Everyone
Swami.
will get 30 seconds, please. Yes, Mr. Gupta, yes,
Hold on.
and then after that.
Mr. I would like to call out the incorrect assessment of
we are
Mr.
only
Swami where
trading
he
the
links
Chinese
our stock
products.
market performance
So
to what
Europe
is
also
happening
will
with the
set the
tariffs. This
production.
is not about tariffs. This is about how the global markets are moving. You can look at the yields at the long-term bonds, how they are moving right now in Japan, US, everywhere. So this is not about Indian stock market coming under the pressure of tariffs.
Okay.
This is just how the global markets are moving,
Okay.
how commodities are moving, how metals are
Okay,
moving.
I think
Let's be very clear on this.
Mr. Swami has got the wrong end of the stick here. I think he's grasping for it, but he hasn't quite got it. Let me just bring in Sanju Verma. Yes, very quickly, 30 seconds, ma'am. I need to move on to another very big story. Yeah.
You know, first and foremost, from the COVID lows, the BSE Sensex as of date is up 259%. The Nifty is up 278%. But that's not the point I'm making. The India-EU trade deal, call it FTA, CEPA, CETA, what have you.
Yeah.
Will it give us access to new markets? Yes.
Yes.
Will it give us zero duty access on 98% of our tariff lines? Yes. Will it lead to supply chain diversification? Yes. Will it lead to greater scalability of our pharma and IT services industry? Yes. And my final point, just 10 seconds. It is said that a 50% decline in tariffs on the auto component industry for India will lead to a 75% rise in exports. That's the arithmetic.
That's the arithmetic, viewers. Hang on to the hard facts. We have to still get to see the fine print, but there is no doubt, viewers, that the perception on India is very different from what is made out by certain lobbies in this country and by those who write long and lengthy editorials and are paid a lot of money to do so, viewers, and suggest that the economic data itself is fake, that the GDP numbers are fake, and so on and so forth. Because if that were the case, viewers, there would be no deals, let me tell you, and we would have been a spluttering dead economy. Anyhow, look, that's a different matter. We'll be discussing these numbers. We'll be discussing the new GDP calculation regime. We'll be looking at all of that in the days ahead. But viewers, today at least we can walk a little taller and we can think of perhaps slightly brighter times.